Tesla's got a $1.4 trillion market cap. Broadcom, 1.7. Both are giants, but only one deserves to sit within the Magnificent Seven. And after running the numbers, the answer isn't as obvious as you might think. Everyone knows that Tesla is a fan favorite. They've got massive brands, massive volume, massive visibility. But when I dig into the fundamentals, I'm still not convinced that it should still be in the group. And that's because Broadcom has done something that Tesla hasn't done in years. It's actually delivered real, accelerating growth tied directly to the AI boom. We're talking 22% revenue growth, 37% adjusted net income growth, and partnerships with OpenAI, Nvidia, Google, the actual engines behind AI. Meanwhile, Tesla, 12% revenue growth, falling profitability, and lots of hype and promises around robotics and self-driving. But the financials, they still say one thing. It's just a car company with an expensive price tag. And what most investors, I think, are overlooking today, well, there's an indicator that's buried in Broadcom's valuation that'll tell us how Wall Street is pricing its future. And it could explain why analysts are still calling it a strong buy while Tesla is a hold. Stick with me until the end because you're going to see exactly which company has the numbers, the momentum, and the real AI exposure to earn that spot, that Magnificent Seven spot, and which one might be coasting on reputation alone. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I break down numbers so retail investors like us can make smarter, more confident decisions with our money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Okay, so let's start by defining what the Magnificent Seven is. Now, you may have heard that they're the most valuable companies in the world, but that's not entirely accurate. Yes, the Magnificent Seven are a select list of very large, very influential tech companies, particularly known for their growth and market dominance. And when I say market dominance, I mean like 40 to 60% of the S&P 500's annual gains, and more than half of the Nasdaq's weight. I mean, before it was called a Magnificent Seven, there were terms like FANG, which stood for Facebook, Apple, Amazon, Netflix, and Google, and FAM. You remember that? It was Facebook, Apple, Amazon, Alphabet, and Microsoft. So let's talk about Tesla. Tesla is known for its electric vehicles like the Model 3 and the Model Y. It operates in the clean energy industry through battery storage and solar panel infrastructure, though on a much smaller scale. And the company has been recently taking steps forward or towards AI and robotics with neural networks, full self-driving computer chips, and its latest big pipeline product, the Tesla Optimus. This is a fully autonomous humanoid robot designed to replace people for dangerous and repetitive tasks. But with all that positioning, one thing remains the same. The overwhelming majority of Tesla's business is still in its automotive segment. So when people say that Tesla's an AI company, well, the financials, it doesn't reflect that story, at least not yet. And that's important for where this comparison is going. Then we've got Broadcom. This is a global semiconductor and infrastructure software company that designs and sells chips that are used in networking, broadband, data centers, and wireless communications. Its most popular products include networking switches, Wi-Fi and Bluetooth chips, storage controllers, and enterprise software such as VMware's cloud computing and virtualization platform. And unlike Tesla, Broadcom's core business is already sitting in the center of the AI gold rush. Broadcom is already partnering with the biggest names in AI right now, including OpenAI, Nvidia, Google, and more. And right off the bat, it already has more direct exposure to the AI industry boom than Tesla. However, Tesla does remain one of the most popular stocks today, and it's also a common topic on my Discord channel. In fact, Tesla far outpaces Broadcom's trading volume. I mean, the last trading volume was 425% more, and its 20-day trading volume was 350% more. And speaking of trading, let's look at how their stock prices are actually doing. Right now, Tesla's trading around $402, while Broadcom is about $340. Over the last year, Tesla stock is up 25%, while Broadcom more than doubled. Now, if we switch to the 5-year period, the gap widens even further. Broadcom is up 726% versus Tesla at 101. So overall, Broadcom has done far better, or they've returned far more to investors. But you can't just look at a stock price in a vacuum, right? You do need to get some context. And to get that context, you need to dive into each of the company's ratios and valuation metrics. Because a stock chart tells you where investors have been, where valuation tells you where they think the company is going. Right now, Broadcom is valued at around $1.7 trillion, while Tesla has a $1.4 trillion market cap. That means, based on market cap alone, Broadcom is now number 6, while Tesla is number 9. Next, let's have a look at the financials. In the last 5 years, Broadcom's revenue has grown 128%, and Tesla up 297%. On the bottom line, Broadcom is up 113%, while Tesla's earnings have far outstripped it, growing 718%. Now, higher earnings growth sounds great, but remember, we still have to look at what's happening today, not what's happened over the last 5 years. For the third quarter of 2025, Broadcom reported a 22% increase in revenue year over year to $16 billion. That top-line growth was mainly driven by accelerating demand in semiconductors, though infrastructure software still grew a respectable 17%. Lastly, there was a 320% improvement in net income, though that number narrows to 37% on an adjusted basis. Adjusted or non-GAAP just means that the numbers exclude one-time charges, which were a lot in Q3, particularly related to tax adjustments. That 320% net income growth might have been mind-blowing out of context, but the 37% adjusted growth rate is more realistic and reasonable. And this is one of the reasons why investors should pay attention to all the available information. The company also expects revenue growth to come in around 24% year over year, at least in the fourth quarter, and at least according to management's own guidance. Now, for Tesla, total revenue for the third quarter increased 12% to $28.1 billion. But net income is down 37%, and this was driven by increases in operating expenses, lower regulatory credit revenue, and higher average costs of vehicle production. And even on an adjusted basis, EBITDA, or earnings before interest, taxes, depreciation, and amortization, still fell by 9%. As for guidance, well, Tesla is a bit more generalized with no numbers and just statements. And for a company that's priced for aggressive growth, vague guidance, it's not really ideal. Now, let's get into the valuation metrics and the ratios. These are the comparative metrics that help investors measure a company's financial health, profitability, valuations, efficiency, and more. And the most popular of these is the price-to-earnings ratio, or the PE. This gives investors an idea of how expensive the stock is compared to its earnings per share. The lower the number, the cheaper the stock is. And forward PE just means that the stock price today is being compared to its expected future earnings. The higher the PE, the more expensive the stock is right now. Now, Broadcom has a forward PE of 46.59, while Tesla is at 382. So Tesla is trading at a significantly higher valuation. So buyers today are pricing in speculation and future growth. In English, Tesla's valuation assumes a future that the financials haven't yet proven. Now, let's move on to the next metric, the net profit margin. And Broadcom's net profit margin is around 11%, which is around at the lower end of what you might expect for a tech manufacturing company, while Tesla is at 7%, which is around the high end or the high average for a car manufacturer. Then there's also a debt to equity, right? And this measures how much debt the company is using to run its business. Lower ratios mean the company uses lower debt or a lower amount of debt and is financially safer. But debt can be an effective tool in scaling. So there's a nuance to this. Anyway, Broadcom has a debt to equity of 0.88, which means the company is using a balanced mix of debt and equity to fund its operations. And this is what you might expect from a mature tech company that's not scrambling for financing. On the other hand, Tesla has a zero debt to equity. And this just means that it either has extremely low or negligible debt. And this means it's financially safe, at least from an operational standpoint. So which is the better stock, Broadcom or Tesla? Well, to answer that, let's consider what Wall Street thinks about these companies. And here, we may see some heads start to turn. Broadcom currently has a consensus strong buy rating among 40 analysts. The average score is 4.8 out of 5. Meanwhile, Tesla has a hold rating with a score of 3.29. The consensus suggests that Broadcom has the better prospects, at least for now. So with all that being said, should Broadcom replace Tesla in the Magnificent Seven? Well, honestly, I think so. There is no doubt that Tesla has proven itself in the past, at least as a market mover. But today, Broadcom has better exposure to AI, a more attractive valuation, better growth prospects, and it has the Wall Street stamp of approval. The only thing that's keeping it away from that spot, at least in my mind, is that it doesn't have Tesla's popularity and history. It has 3 to 4 times Broadcom's trading volume, which means it does have higher visibility and attracts more attention. And popularity is what can keep a stock in the spotlight long after the fundamentals say otherwise. But what about you? What do you think? Should Tesla keep its crown on account of what it's achieved, or do you think that Broadcom deserves to overtake it? Let me know your thoughts in the comments below. And while you're there, if you found the video helpful, do like and subscribe because it helps others find the video, it supports the channel, and you won't miss out on any of my future deep dives. Well, folks, that's it for me today. I want to thank you so much for watching, and I'll see you next time.